Good afternoon, everybody. Today is Wednesday, April 5th, and I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure, added back some stuff today, closed out some stuff into the close. I literally just got out of pins in between when the market closed and this meeting started. There you go. Okay, let's jump into it. So first of all, we got Pat doing conversations with a pro trader streamcast on LinkedIn starting at 5 o'clock today. Be there, be square. I will certainly be tuning into that. So we want to make sure that our meeting is done probably 5 minutes before 5 at the latest. So happy to work through that point if necessary, answering questions and going over today's information. And then I'll be tuning over to that. So looking forward to it. No pressure, Pat. No pressure. SPY's closed down a measly 0.25%. I tell you, today really, to me, felt like a massive sell-off day. And then you look at the SPYs, they're down 0.25%. You look at the Dow, it's up 0.25%. But no one looks at the Dow unless you're somebody who doesn't know anything about stock markets. And then you look at the Dow because for some reason the Dow is really famous, even though it's only 30 stocks. But SPY down 0.25%. Qs, here we go. NASDAQ down a full percentage point. And IWM down a full percentage point. So that's really kind of where the pain was. SPY held in really well. XLE up 1.5%. Energy looking great. The XLE chart looks fantastic. Really like some of these XLE charts right now. And the XLE chart itself as it begins to build out. Why don't we even start with that? Let's take a look at the XLE chart. Daily chart here. So 2 days ago, you had the OPEC cut announcements led by Saudi Arabia that caused that massive gap up. I mean, even prior to that, we had been looking at a long in these XLE stocks back through $80. Chevron and Oxy were two names that we were looking at in particular. So really hope that some people had exposure to some of these energy names from mid-March here and then got lucky with the Saudi Arabia announcement. Basically, chart was looking really good. Chevron and Oxy in particular are names that I've liked. The XLE for a while I was shying away from where they could pull down enough there, and that $80 was a pretty big level. Saudi Arabia thing hits, what was it, Monday this week? The first trading day of April. And gap up is massive, and I know it got mentioned in the afternoon meeting that day that it was just too big. We needed to reset up. And when you're looking for reset ups and things, one thing I'm always looking for is the ADMA to catch up. Whenever you have these big gaps, like a great example is when you got an earnings report that causes a stock to gap down really big or up really big. It takes a lot of time for that daily chart to heal that more or less extension that is that's coming from that. And it can be a little bit faster if you get the gap up and then it trades down really quickly. Well, yesterday was such a weak day for the IWM. Banks and energy names got hit really hard on that. So we had a really, weak sell-off day on XLE. If you read Pat's note this morning when it gets into some of the information that's coming from like the institutional desk at Goldman and stuff, I think somewhere in there it even mentioned that it mentioned these energy stocks in particular, that 2 days ago there was a lot of demand for buying and that yesterday was just completely gone. It's good. It price corrects. And then today, you have to take notice of the fact that this XLE is the strongest thing out there. I guess you got like utilities that are technically up more. XLU utilities up 2.6%. That's more of a defensive play. I personally don't really trade utilities and healthcare too much. Healthcare was also up pretty big today, up 1.25%, led by. Type them up on this chart. XLV doesn't even look like the market had a pullback the last couple of days, led by UNH. UNH also really helping the Dow. United Health here is a big component of the Dow. UNH is up 3.25%. This was actually on our list today. This UNH, I put it on our list, even though I specifically said I wasn't going to trade it because I really like this 1, 2, 3 play with an upgrade or with news. In this case, an upgrade. big up day, rest day, continuation day. So UNH was phenomenal. If anyone actually traded it today, it was one of the best things you could look at. And again, XLV, XLU up huge. I don't really trade names in that sector that much. For me, XLE names are a much more tradable vehicle. And I just think that, I know again, SPYs are only down 0.25%, and probably utilities and healthcare and energy are helped that. I'm actually surprised that the IWM is down a full percentage point, given that energy performed as well as it did today. But you have to take note, I think, if you like XLE as a trading vehicle, or some of these stocks as a trading vehicle, as I do, of the relative strength in XLE today. The pullback from yesterday is enabling this ADMA to catch up pretty quickly. It'll probably be at yesterday's low within another day or two. And we've got this inside day on the XLE. So this is something that we can definitely continue to pay attention to tomorrow, because that inside day potentially gives it the setup. So energy looking fantastic. Tech, growth, financials, especially growth today, on the flip side of things, just atrocious. Really been looking for that continued mean reversion in the IWM and the Qs. I thought that, in the morning meeting today, we discussed with where the SPYs were, where the Qs were, further corrective price action on this market makes plenty of sense. And that corrective action in a really bullish case might look like sideways action, but a deeper pullback for today just makes plenty of sense. I didn't keep any of my shorts from yesterday, and I stand by what I said in the morning meeting today, that I felt that pressing shorts today was a more difficult risk-reward. The easier money on the short side was starting yesterday, and if you kept certain things short from yesterday, you got some great follow-through. But as far as like new entries today, I didn't really like the short setups. I didn't really like the long setups because I felt like we needed more time to correct. So kind of just expecting the market to chop. It certainly turned out that with a lot of the stuff that we focus on, these growth names, tech stocks, financials have become a big focus recently, that you did get a pretty good continued downside follow-through in those names today. So, again, I was looking for some mean reversion in the IWM and the Qs again, where the Russell was weakest yesterday. I thought maybe it could show a little bit of strength to the Qs. At the end of the day, on a percentage basis, they're down the exact same amount. So there is no relative strength and relative weakness. There was some flipping intraday, though, particularly when that number hit at 10 a.m., which was what? Services PMI? Services PMI came in light. And it's interesting because on the inflation battle, the two things that the Fed keeps pointing to that is keeping inflation too high, that they really want to see come down so that they can feel more comfortable stopping the rate hikes, are job openings in particular. So jobs, but particularly job openings, and services. Services have been the really sticky spot for inflation. So now, we're in this battle right now of the economy going into a recession versus the slowdown in inflation. And I've said that a slowdown in inflation is probably more important than ever right now post-banking crisis, because the Fed potentially loses its tools to continue to really hike rates consistently if they need to fight inflation. So it's more important than ever that you see JOLTS, job openings, which is such a big thing that the Fed keeps pointing to as a contributor to inflation, just wages and jobs in general, that came in light. Obviously still ahead of what might coincide with a 2% inflation target. But the fact that came in light versus expectations, that sounds great to me. And combine that with today we had services come in light, which you could certainly make the argument that points to recession. But if you want anywhere to cool down, it's probably those two things, because that's where the bigger nerves are as far as the inflation conversation goes. So, going back to our charts here, we had one of those relative strength, relative weakness flips. In the beginning of the day, the first half hour of the day, I was really pleased with the price action. You had the market gap down this morning, okay, fine. But this IWM creates this pivot low on the 940 bar, and is working its way higher. I thought that this IWM was going to work its way to green at this point. Obviously, it was a wild card whenever there's an economic number that comes out. And then the flip side is you look at the Qs, the first half hour of the day, Qs were atrocious. Just very relatively weak, continuing to grind down. And once that 10 a.m. services number hit, it really flipped things again. And I guess I understand conceptually why, though, of course, eventually both tech and IWM were kind of weak throughout the trading session. But as soon as that 10 a.m. number hits, that Russell, which again, I think that this is the best representation of kind of your average company that's out there, just really died. You know, that relative strength we saw in that first half hour where this chart was looking pretty good. It's getting above these moving averages. Okay, fine, a little pullback, not a big deal. But you're looking for this to continue to get back to flat. That just completely died. Opening low breaks, and then IWM was very, very weak for the most part the rest of the day. I know that there were parts midday where SPYs were ticking lows and Qs were ticking lows, and the IWM was actually a little bit of a beacon of hope because it was going sideways here. But the Russell ended up kind of creating this intraday base that it never was able to break out of all day. Maybe a little bit into the close, which was nice for me for my TNA long to be able to close out that position with the nice little P&L bump on it. So TNA actually ended up being my you know, the 3x leveraged IWM actually ended up being my best name of the day today. Believe it or not. Especially with this little bump I had in the close that I liquidated my position into. But for the most part, we lost the relative strength there. We based throughout the rest of the day. I guess it never broke lows, but it was never able to kind of break up either. And the Qs initially, which were weakest, caught the initial uptick on that 10 a.m. number, which I know failed and Q stayed weak as well. But at the end of the day, you don't have any mean reversion. So I did not get what I was looking for and what I was really hopeful for based on the price action from the first 30 minutes. First 30 minutes, I thought that this Russell could actually play some catch up, and that it could be good for our banks. And then that just kind of died out also. So at the end of the day, here, clip over to our daily charts. That getting bid up a little bit into the close, I think for the Russell certainly helps. I had mentioned, I think yesterday and this morning, that this pullback in the IWM is, you know, yesterday, much heavier than you want to see that if you're a bull, for sure. Bearish engulfing candle on the daily chart yesterday. But the Russell bulls are not necessarily, you know, overly in trouble yet. Because, like I also said, even on the way up here, you're not going to get a straight V bottom, I don't think, from 168 to 188 in the IWM. If the bull case plays out, you're going to get a pullback. You're going to get a higher low. So that's what we want to see right now, is if this pullback is leading to that higher low. So I don't think that the bull case for the IWM is shot. If we start getting a close below 172, then you got a bigger problem, I think. But, you know, creating a pivot in the 172 to 173 area, I think it's exactly what I mentioned in the morning meeting today, isn't necessarily the worst thing in the world. Today's low was 172.53. We closed off lows. I wouldn't say that we closed in such a way where you can feel really confident that this is a potential pivot low. So there's a little bit of a tail there. But you do need to see some relative strength, or at least you need to see it hold up tomorrow. Ideally, you see a close above like 174, 174.50 for the IWM tomorrow, and that could actually confirm this is a pivot and a potential higher low, and then, you know, your real confirmation obviously comes in with a close above 179. So we'll see how that plays out. IWM bull case I don't think is shot, but this pullback is certainly a little bit deeper than you want it to be. And again, the mean reversion and relative strength from the IWM that we saw for the first half hour, it just died when that services number hit. Because again, when you think about what it means to the market on some of these numbers, and it's a constantly evolving story. You know, and we make jokes about it here in the VTF all the time, right? Is good news bad news? Is bad news good news? I don't even know anymore. Because, you know, sometimes a number that's bad, like, hey, less job opportunity, like from yesterday, there's less job opportunity out there. Well, that's bad, but it's maybe good because it's good for inflation. Inflation comes down. There's still plenty of jobs that's out there. There's still like, 2 jobs out there for every person that's looking for a job. So, if you're unemployed right now, I don't really understand that. Maybe you need a week to find your job, or you're just lazy, because there's certainly plenty of jobs that's out there if you're looking for it, and that number coming down is not the end of the world. But again, on the surface of things, if you look at less people working or something like that, you think, oh, well, that's bad. Or, services PMI coming down, oh, that's bad for the economy, and that's true. But then is it actually good because it brings down inflation? So we joke about that a lot. But it is a constantly evolving story, and that's what makes it difficult to read sometimes when you get a number. Is the market going to go up on it? Is the market going to go down on it? Hard to be certain. But right now, the way that I'm seeing it is when you get the economy slowdown numbers that are also good because of the inflation situation, I think that actually gives strength to tech probably more than anything right now. Because what does it mean? All right, slowing economy is bad for most companies. Where are most companies going to be represented? They're going to be represented in the IWM. And in some ways, you could almost say that the IWM represents your real economy a little bit more than looking at the Qs, or certainly looking at the Dow and the Qs, the NASDAQ. At this point, we know 7 companies or so is like, and I always forget exactly what the statistics are, so I might be exaggerating a little bit, I might be off a little bit, but basically 7 companies in the Qs are like 60% of the NASDAQ or something like that. That's not representative of the economy or the average company that's out there, honestly, any more than the Dow is. And I never look at the Dow, and I do look at the Qs, but I trade a lot of tech stocks, and I trade Apple and Amazon and Google and Microsoft and Meta very often, so I gotta be paying attention to the Dow. But, if you get that slowdown in the economy, that can actually create an easing impulse, because then you don't have to raise rates in the same way. That potentially becomes better for some of those tech stocks. Also, we've discussed just how mega cap tech stocks are really like a safety play at this point. Especially, we said that right away on the first day of the banking crisis. Oh, we got a banking crisis. Apple's along. They got more cash than most countries. Apple's along, and that concept and that idea actually worked out really well. But then if you look at a slowdown in the economy, where is that probably going to be most felt? Will be in your IWM. So we'll continue to pay attention to that story as it evolves. That's your IWM. We'll see if that turns into a pivot. Qs touched the ADMA today. What's the big deal? There is no big deal. This chart looks fantastic. It needs time. And even a retest of this breakout area of 313 in the Qs, just fine. 21 EMA is at 209. You pull back to 310, not even the end of the world. And that's what I was saying at one point today, especially with the SPYs, because the SPYs are actually most extended. The SPY, the S&P, didn't even touch the ADMA on the daily chart. So it just shows you how strong certain areas are. And again, obviously being helped by XLU, XLV, XLE today. Yeah, because it's impressive. Because at one point today, if you're looking at certain things, especially if you're looking at growth stocks, which we could say is represented by ARK, but you could type up plenty of these names. There were so many growth stocks today that were smoked. DraftKings down 6% here at the close. Roku down 7.25% here at the close. Pick your growth stock, type it up. They were for the most part destroyed today. You had financials not trading well. How did XLF close today? XLF closed down 0.25%, but KRE closed down a percentage point. Some of those KRE names were really very weak today. So if you're looking at certain things, financials, tech, which has been a lot of what we've been focusing on, it felt like a much bigger down day. And then I'm looking at the SPYs. I'm looking at the SPYs on an intraday trading lower, and some of these stocks getting smoked. I'm like, the SPYs aren't even touching their ADMA on the daily chart yet. How bad is Roku going to be if the SPYs get to the ADMA on the daily chart? Right? That was kind of the bigger fear today, I thought. But you look at the SPY chart, and it looks just fine. If anything, it just looks like it needs even further correction, more sideways price action, or even down price action. So we'll see how all that plays out. My thought process for the week has been correction so far. For the last 2 days, it's been accurate. We'll see if it continues to play out. But if we do get further correction, one of the biggest things that I want to see from the bull side of things is the side WM hold up a little bit better and try to create that 172 to 173 area pivot that we're talking about. So we'll see how that plays out. As far as individual stocks today, I mean, you know, I was too aggressive today. You know, I was able to make some money in TNA, but I'm not necessarily happy. I had some pretty good executions on TNA, but if I'm, you know, reviewing my trades kind of in hindsight here, I was too aggressive with it. I got too heavy too early, but I just had a couple really good executions on it that kind of saved my butt. But I was just too aggressive, I think, generally with the market today, kind of grading my own stuff. You know, I talked about in the morning meeting today and in the afternoon meeting yesterday about how further corrective price action is necessary. What does that mean? What that means is today is not a good day to be aggressive. You know, if you want to find certain individual stocks that are in play, I mean, it's literally what I wrote down for the team here this morning. Let me look. What did I write? I wrote flat to down open. Flat to down open. Yesterday, price correction helped satisfy extension, but more time is probably needed. Focus on relative strength and weakness and in-play names. What does that mean? You know, one of the big themes that I always talk about that is necessary for success in trading is knowing when to be aggressive and knowing when to be more passive with your trading. Well, that information from the morning meeting that I wrote down myself for my game plan, it very specifically means don't be aggressive today. Be patient. Take some trades. Try to create some cash flow for yourself. But the daily chart needs time after this massive move that it had. So I'm not happy with my trading today. You know, even though so I lost some money in AI, I lost some money in Palantir, I made some money in Pinterest that I closed out of, I made some money in TNA that I closed out of. My TNA gain and my AI loss are somewhat similar. My TNA gain's a little bit more than I lost in AI. So, you know, net, my day trading today is a wash or it's down a bit. I took a loss in Palantir, which is another one that I was a little bit too aggressive on too early on, even though I was able to kind of trade my way out of it for the most part at a certain point during the day. You know, I ended up not having terrible P&L considering the fact that I didn't trade well and I was too aggressive and I didn't follow my own game plan today. So it's important to recognize that. You know, I say it all the time. Just because you made money in something doesn't mean that you did a good job. Just because you lost money in something doesn't necessarily mean that you did a bad job. So if anything, I probably got a little bit lucky. If anything, the fact that I didn't do a better job listening to my game plan today probably means that I should have had worse P&L today. I probably should have lost more money today. And whatever, I had some good executions in TNA and executed well on a couple other things that maybe saved my butt a little bit. But I didn't follow my game plan. And that's a bad job. So I have to do a better job. I have to do a better job. The good news is overall, I think I've been doing a great job with my own trading this calendar year so far. I've been trading really, really well. And this is probably the first day that I can point to in all of 2023 where I can look back on my trading and be kind of upset with how I traded and beat myself up a little bit over it. So if this is the first day that I kind of traded poorly, or maybe the second day if you want to include you know, the fact that I probably should not have been involved in SIVB when I got stuck in that halt, if it's the second day out of, you know, 3 full months on the calendar, it's not terrible. I try to limit my mistakes at this point to 1 day or 1 mistake per quarter at this point, and I have the ability to do it, so I gotta do a little bit of a better job. But I'll do better tomorrow because I'm pretty good at beating myself up when I'm not happy with what I did on a particular day, and then I don't let myself repeat those mistakes. So that's all I got for you guys. We got a few minutes here before we gotta tune over to Pat, so I'm happy to answer any questions that you guys have or take a look at anything that you guys want to take a look at. So let's see here. So Nick scalped some UNH off the open. Okay. Tough to hold names like that, yeah, for sure. I mean, I think it's tough to execute them. The flip side on what I would say to your comment, you know, that it's tough to hold names like that, I agree with you. I think it's tough to execute into names like that to begin with. So I think that if you were able to execute into the stock to begin with, then you may as well try to hold, you know, a piece of it for that bigger move and kind of keep it. Because in a lot of ways, I think the actual execution on this type of expensive spready stock is the hardest part. But good job being involved in it at all. Kyle said that MPC and VLO had massive days. Yeah, that's a big snapback on MPC after yesterday. VLO also. Next from Ramoon on AMD. So we talked about actually the potential of a short in AMD through like the $93 to $94 area, which is support. And what we mentioned in the morning meeting was that this AMD chart's actually very bullish. You got a really bullish looking chart here. But the consolidation that it's created actually shows you relative weakness. Because if you look at the Qs aren't in a consolidation. They broke out of that consolidation. You look at a similar stock, you look at NVIDIA. NVIDIA hasn't been in a consolidation. NVIDIA's been in an upside trend, an upside grind. So on the one hand, you have a super bullish chart pattern here in AMD. The other hand is that chart pattern is inherently bearish because of some relative weakness, which, again, you know, when you look at chart patterns, and this is why just memorizing chart patterns is not enough to make you a successful trader, we need to understand the supply and demand dynamic that went into building out that chart pattern. And now all of a sudden when you look at this AMD, which if you couldn't see any other charts, you're like, oh, this is a bull flag here on the daily chart, it looks great. But then all of a sudden you say to yourself, you know what, maybe this chart here isn't all that it's cracked up to be, because NVIDIA was able to go, the Qs isn't able to go, why hasn't this one? So therefore, if the Qs actually give a further correction, which we said was likely today, and that correction is through price, meaning it pulls back down, then AMD could actually have a decent probability of a breakdown, which could create a short into that somewhere in that 93 to 94 support zone. So that's just some recapping there on what we discussed with AMD. Let me read the rest of your question. So you shorted AMD at 10 a.m. Okay, that's when the number came out. So you got that pivot high here that also happened with the Qs. So you shorted at 93.65 versus that high. It's a fantastic execution. After it pulled off the 80 and the 5, and yeah, it's a fantastic execution. You covered your risk and covered half of the remaining position, so half of the half, I would assume, at 102.97. Assume you mean a different price there. Maybe you mean 92.97 at 10.05. Probably mean 92.97. It's also a great bid there. Cover the other half at 2.45. I assume that means you're out at 2.45. Okay, probably when this last pivot breaks up. Okay. There was a higher probability that it would grind higher into the close. I don't know why you think that. I was actually very worried. I know we actually caught a bid into the close. I was actually very worried that we were going to close on lows today, which we did not. But that was a concern that I had, that I was communicating. It would have just made sense. It's only a day 2 on a correction. It would have made sense for us to close on lows, but we didn't. We rallied a little bit into the close. You think I booked profit too early and should have covered smaller portion of the position, for example, a quarter instead of a half? No, I think you did everything great. The only thing I would consider doing is, after the risk is fully covered and you're covering more stock, you going back to the conversation about cash flow trading that I've discussed with you guys, would maybe be to offer out, you said you covered like 92, 97, which is a fantastic cover right at the low of this tail. You could have offered that some of that stock, maybe not all, or maybe all. You could have offered some of that stock back out closer to this ADMA to take it back, and then try to cash flow that a little bit. And then if you took that stock back here and it goes all the way back up and stops you out, you know, you would have made a little bit less than if you didn't do it. But you'll make even more if you can, you know, reshort it and cover it. Let alone if the range that ended up happening from 11 to 4 actually started at 10:30, in which case you know, cover and short and cover and short and cover and short, and maybe you're able to kind of play that range throughout the entirety of the day. So that's one thing I would have done a little bit. I would have probably done a little bit differently if it was my own trade. And again, that's only, I really think, to be done after the risk is covered. And it doesn't necessarily have to even be that you took back the entire position of what you covered, just maybe some of it. So that's one thing that you could do. And then I don't like your stop out on the end of your trade here, to be totally honest. If you're trying to be a little bit defensive because the market big picture is still bullish and keep it tight, fine. But I don't love your stop out. I would have probably kept that into the close. I don't, even if you were trailing based off this like 205 high or this 140 high or whatever, it doesn't really meet my trailing rules because you never got a new low. So I don't like the fact that you got stopped out of. Maybe if you want to keep some of what you still have tight and get stopped out of it, okay, fine. I don't like the idea that you fully closed the position out there. I would have held the remaining part or some of the remaining part into the close, and then if I was right and we did actually close on lows, then maybe this AMD's rolling down to 91.70 into the close, in which case maybe you want to keep 10% of the position as a short swing in case this market corrects further than I'm initially expecting, which could certainly happen, and you get a deeper pullback into the space between the 8 and 21 EMA on the daily chart, which that is very plausible. So that's what I would have done a little bit differently if it was my trade. But obviously you got to assess for yourself, you know, your account size and how you need the money and things like that. So appreciate the question. From Aman, Costco looks interesting here. Let's take a look at Costco. Ooh, what happened? Was this just market related that crushed this thing today? Is it down after hours? Oh, it's down after hours on something. There's some news on Costco. I don't know what the news was. And usually Pat gets that stuff posted in the VTF for us. Monthly sales volume. Yeah, okay. There you go. So the stock actually closed around 498 today. So it closed all the way up here, still within the range. This sell-off is happening after hours on news. So that's something I would want to reassess tomorrow. Thanks, Varun. That's something I would want to reassess on it tomorrow. You got support here at 485 is the spot you could potentially look at it, but I don't have strong conviction on it. I also don't like trading these $500 names with the wide spreads kind of in general. Do I think AMD still looks bullish after today? Yeah, I don't like trading Costco. AMD closed below support, so it's not looking great. I mean, the 21 EMA is here, but I wouldn't want to be buying AMD unless it's recapturing 93. NVIDIA looks fine. This is just another potential higher low. 21 EMA hasn't caught up yet. Corrective action into the space between the 8 and 21 EMA. NVIDIA looks just fine. AMD I wouldn't really want to buy until and unless it can get back above 93 or resets up somehow. On YouTube, I got Sebastian asking, what's going on, Brandon? I got Sebastian asking a question about Google. Yeah, so Google was on the list today. I'm actually surprised that they sold Google on that news. The market's been so crazed about all this AI stuff recently and the supercomputers and all that. So you had Google gapping up big this morning on some announcement from Alphabet saying that they're faster than NVIDIA. I thought that there was a chance that they could run this thing today through 106 as a breakout, and even though I really did not like tech stocks today, I thought that if there was one that could go, it would just be just a real breakout continuation from Google just off the news. Didn't happen. They sold that thing real heavy. I remember this pullback into equilibrium where there was still some relative strength and kind of the gap fill here, and it was still green, and then the inside 5 at 940, and I said onto the VTF that if the inside 5 breaks up, you could try that versus lows. Equilibrium pullback. If the market gets some strength here, if Qs get some strength, this thing could be a leader, and you could get that snapback. But it never triggered, right? It never broke the inside 5 to the upside. So no harm, no foul. Immediately it breaks down, and for me, by the time this 945 candle happens, I just go, okay, Google shot. Any thought process of momentum coming into this thing off of that news is shot. It's one thing if it pulls back and fills the gap when the market's being super weak off the open. We see that happen sometime in earnings names and news names. You get that quick snapback into equilibrium. You actually get the pivot there, and that pivot sometimes is a pretty good long trade. I love the fact that the inside 5 comes in because that's your actual execution setup. It gives you the clear execution setup where you can buy on the way up. 4th bar comes in, breaks that to the downside, so it causes your trade to be non-existent, and then new lows break, and this is a negative mirror, but that just should not be possible if you're going to have momentum coming in on this type of thing. So that was shot for me at that point. But let me actually read your question. So you're talking about 104. Actually, Josh came in and called out that long at 950 in Google off that 104 area, and I don't remember anymore why I liked it, to be honest, because by that time it's normally going to be off my radar. But I guess there was some relative strength there, gave that pivot. Josh called out the long, he got a decent bounce off of it, but it never made new highs. But it broke below and tested 104. I was looking at the level 2 and I saw a huge size on the ask. 2250, so it sounds like you're talking about 225,000 shares. Exactly at 104, and it couldn't break above for some minutes. My question is, when we see something like this, what decisions should we take, or what do you make out of it? So 225,000 shares on the offer. Google today traded 27 million shares, 27.7 million shares. So it's not really that significant. Back in the day, 10 years ago, I used to trade off that stuff. When you'd see 200,000 shares coming into something like that, that would be something I would take note of, and I would actually trade off that size. For me, those trades have been gone for a long time now. They just don't work. When I started my career, you could be consistently profitable if you were disciplined, doing what we called size trading, finding size in the level 2 and trading purely off the level 2. Nowadays, to me, it's somewhat meaningless, and if anything, it almost seems like when that big size comes in, it almost is like a target for the market. The market seems to gravitate towards it and print it. So looks like eventually that got printed. You'll still sometimes see, execution traders or execution robot traders for funds, they're just much smarter now than they were 10 years ago, when you could kind of make a living off some of this stuff, or it's actually 10 plus years ago at this point. A lot of times if you see what you're describing, stock sells off and then you see a big offer come in after the sell-off, that's actually the end of a big order. So you had some institution that needed to sell 2 million shares of stock or whatever in Google, and they're crushing this thing and they're selling it all the way down, and that's causing a lot of this selling. And then they've got a couple 100,000 shares left, and they just say, you know what, here's my couple 100,000 shares. I'm gonna just show it on the offer. Come and have it. And then they take it out. So yeah, I wouldn't read too much into it. From Ramoon here on Walmart. Walmart is super strong today, up over 1%. So Walmart's been trading really well, and the one I've been wanting to keep track of and remember to pay attention to in the morning meetings or when I'm doing my morning research is IBM. IBM's become an interesting story again. It's been trading really well. Anyway, Walmart I actually find to be a tricky stock to trade. I find it just doesn't trade clean, which has always kind of been my problem with it. This is one of those names I kind of just like to dollar cost average into like a retirement account or something like that, long-term holding, collect that dividend. Anyway, 9:50 a.m. You missed a trade on the technical pullback continuation hammer off the ADMA. I like that trade. You bought it at 149.04 on the way up. I hope not. That'd be super late. On the second pullback at the 10:15 low. You gotta be a little careful. This trade to me is not as good as this trade because of the time of day. You gotta be a little bit careful on 5-minute continuation trades at 10:15 plus. When you have 15-minute extension, it becomes much more difficult to get the follow through. You got your risk covered, awesome. You sold another half of the position. Okay, well that's a great sale. You almost high-ticked it and kept the other half and got stopped out. Yeah, so obviously really good execution again on this trade. Only thing I would point out to you, and it makes sense to me, you executed well. And this is what I say all the time, guys. Execution is so important. Execution skills are so important because you can take failed trades, you can take mediocre trade setups, and at the end of that trade, when it fails, you're looking at a P&L that is 0, or you're looking at a P&L that's even small green. And the entire difference on that is how well you executed. And you executed well on the entry, you executed well on the profit taking, and that's how you were able to take what I would describe as just like an okay trade, and it failed, and you were able to make money on it. And why is it an okay trade? On the one hand, you got the relative strength. Stock's green, it's super strong, but you are fighting the market a little bit is kind of the other hand. But the big thing for me is what the 15-minute chart looks like at 10:15 when you're getting involved. 10:15 plus, you really need to factor in what your 15-minute looks like. And you're going long off a 5-minute low when this 15 is this extended off this equilibrium moving average area. It's just going to be really hard to have this be an absolute low that you're getting follow through on unless there's a specific news event or a ton of strength in there. So, appreciate the question. Yeah, Sebastian asking what type of trades that I used to take like 10 plus years ago off size. A lot of it was shorting off size on the way up and making money off kind of some volatile pullbacks off that size before the size would get cleared, if it would get cleared. So that's what I used to do back then. Okay, so we got Pat on Conversations with a Pro Trader starting in about 6-7 minutes. So I'm going to call the meeting here. I'm going to tune over to that in 5 minutes. See what wisdom the great, young, and handsome Patrick has for us. And that's it. So have a great night, everybody. See you all tomorrow.